It is believed that things happen twice in this world, once in your mind, once in reality. The AI powered crystal ball is already manifesting itself because it is already put out there for the universe to execute on its plans. Welcome to the Craftspark episode. Before we talk more about the AI powered crystal power ball, we are going to come into the format of the show where we met our founders of Craftspark, Apola and Kumaresh last time. But as you know, the format doesn't stop at getting the views from the founders. It invites experts, mentors, investors to the show to seek their inputs from their vantage point. We have been very fortunate to have awesome guests, awesome faculty on the show so far, even when the Snakes and Ladders startup show was not as well known or as famous as it is today. Today's episode is fortunate enough to have been graced by Kishore Kumar, who's the head of brand intelligence and Acceerator program at Big Basket, with over 20 years of experience across ITC, Big Basket, Spencer's. Kishore Kumar brings a wide range of experience across e-commerce, modern trade, rural retail. He also runs a YouTube channel called LSD, Life School Diaries, where he reviews books and shares the wisdom of the world with the viewers. Our next guest is Amit Singal, who has been in the ecosystem for over 15 years in various roles and is the founding partner for two funds which he runs right now. One is Fluid Ventures and the other is Real Time Angel Fund. It's a pleasure and privilege to welcome Kishore and Amit on this show today. However, before we get into the show, I'm going to remind viewers of this awesome remorphing experience that Craftspark had executed. Let's have a look at that clip. Welcome back. You must be wondering what happened to the AI powered crystal ball that we spoke right at the start of the episode. Wouldn't it be fun if early stage investors have an AI powered crystal ball where they could put in some pitch decks and maybe some other documents and predict whether that particular startup is going to become a multi-bagger, perhaps even come to know the multiple and the time frame within which it's going to become a multi-bagger? Wouldn't that be awesome? Even for the founders, if they had a tool which could actually tell them how and when the startup is likely to become a multi-bagger, could be such a huge boon. When I first put that quote out, I got some interesting reactions. One reaction I heard was that the thrill of early stage investing may go away. From whatever I have seen, I'm not too sure if a lot of thrill remains when an early stage investor sees capital erosion in their portfolio. Someone said that human beings have such an awesome knack of messing up things that no crystal ball will ever be able to predict the human frailties. Perhaps true. But then the same human that has the knack of messing up things, performs the most complex surgeries, takes the rocket to the moon and beyond, and does millions of near impossible things on a day-to-day basis when given the right kind of tools. If that's the case, why can't human beings drive a startup to success with near zero mishap rates? We are envisaging a future where the cliche statement that you have heard that 90% of the startups fail will become history very, very soon. We are very certain that even if one capital erosion is prevented for an investor, or if we are able to prevent even one startup from going bust because of the AI initiatives that we have initiated, because of the Snakes and Ladders startup show, we would consider the show to be very, very successful. I know there will be a sense of disbelief as to is this even possible? But I'm sure you have heard of this gentleman called Icarus who tried to fly with wax wings. He must have had the power of sheer belief, especially now that jets and aircrafts are so common. Compared to all of that, the crystal ball is fairly small, fairly insignificant. It looks like it's a reality about to happen. In our own way, we have taken some steps to basically make sure that we harness the power of artificial intelligence to various aspects of the startup ecosystem. Have a look at Ava, our new recruit, who's basically an AI powered network development manager.
नमस्ते, द ग्रेट यूनिकॉर्न हंट में आपका स्वागत है। हम एक अग्रणी स्टार्टअप डिस्कवरी और नेटवर्किंग पोर्टल हैं। एक बार प्रोफाइल बनाने और लॉगिन करने के बाद ज्यादातर लाभ आपको दिखाई देंगे और आपके लिए उपलब्ध होंगे। आप वो भूमिका चुन सकते हैं जो आपको लगता है कि आपको सबसे अच्छी तरह से वर्णित करती है। यदि आप एक वीसी हैं, तो आप द यूनिकॉर्न हंटर्स सेक्शन में दिखाई देंगे। यदि आप एक एंजल इन्वेस्टर या कॉर्पोरेट हैं, तो आपकी पूरी प्रोफाइल द यूनिकॉर्न स्पॉटर सेक्शन में दिखाई देगी। यदि आप एक संस्थापक या सह संस्थापक हैं, तो आपके पास अपने स्टार्टअप की व्यावसायिक प्रोफाइल बनाने का विकल्प भी है। आप एक पेशेवर तस्वीर और वर्णनात्मक बायो अपलोड करके एक पूरी प्रोफाइल बनाते हैं जो लोगों को ये समझने में मदद करता है कि आप क्या करते हैं और आप क्या चाहते हैं। hello@thegreatunicornhunt.com पर एक लाइन छोड़ें।
वर्णात्मक, इनका बस चले तो ये श्री अमिताभ बच्चन जी को हिंदी सिखाने निकल पड़ेगी। We have also created Investor Relations Manager, AI-powered Investor Relations Manager, Helena, who is going to walk us through some of the deals, some of the startups that are there on the greatunicornhunt.com.
Hi, I am Helena, AI-powered Investor Relations Manager with the Great Unicorn Hunt. Here is a lineup of shortlisted startups for May called May Marchers. Startup A is a tech-enabled last-mile logistics with urban semi-urban riders. Startup B could be the next Bikaji or Haldirams. This startup has a total of 37 SKS and has served 5 million customers covering 13 states and generated 40% repeat purchases. It has unique low-risk products comprising in-house brands and interning brands. Startup C is the ultimate chronic care management platform, the healthcare startup specializing in personalized solutions for patients managing PCOS, diabetes, obesity, and thyroid conditions with AI-driven personalized nutrition plans. To see the full lineup of startups, please drop an email to helena@thegreatunicornhunt.com. Especially if you would like to see the deck and speak to founders. Thanks for watching.
So this was Helena, an AI-powered investor relations manager. I'm going to request Helena to talk about one particular startup to describe it better. Helena, could you please share the last mile logistics startup details?
Hi, I am Helena, an AI-powered investor relations manager with thegreatunicornhunt.com. I would like to know if you would want to evaluate a tech-enabled last-mile logistics company that posted a 600% year-on-year growth in top line with following highlights. Their health vertical offers a complete ecosystem for diagnostic centers, phlebotomists, and patients. Not only this, they have built a state-of-art tech backbone created to tech-enable last-mile delivery. They deliver over 2.3 million orders annually through clients like Amazon, Big Basket, Zepto, others. They have EV collaboration with Mahindra Electric, e-mobility, Hero Electric. The revenue for FY 2021 to 22 was 2.54 crore Indian rupees. They showed an exceptional jump of 600% growth in top line by posting 18 crore Indian rupees in 22 to 23. Expected revenue for FY 2023 to 24 is 28 crore Indian rupees. Do drop a line to Helena at thegreatunicornhunt.com if you would like to speak to founders or see more startups from us. Thank you.
Helena has not made anybody redundant so far, and she does a lot of heavy lifting in terms of communicating the deals purely because of the way the AI-powered technology has been harnessed. But this is just one slice of what we have undertaken. As we shared last time, we have actually created a trained, tutored, customized chatbot deployed on our portal, which has been trained to create snakes and ladder scenarios for various questions that investors or founders may have. In fact, the reason we say this show is an AI powered startup show is because the script for the snakes and ladders that a startup founder faces is run through this chatbot for us to be able to extract from the entire Pacific Ocean that perhaps ChatGPT is and cull out specific details, specific snakes and ladders that could be relevant for this show. However, we have not stopped at that. We have come with a plan to basically launch the world's first AI powered deal manager. Call it curation as a service, perhaps. The thought here is that most of the VC analysts, chief investment officers in VC firms, in angel investing firms, in family offices have extremely small bandwidth. With their finite experience, with the finite bandwidth, it becomes a stretch to evaluate every single startup. As you know, for any investor, there are two horror stories that they invariably face. One is that perhaps a bad egg might come into the system, a deal, a proposition that had some risks that nobody could spot. And that bad egg ends up wasting everybody's time, perhaps wasting a lot of money and capital. The other horror story that investors dread is when there is a good egg that fell off the table because nobody could spot the potential in that particular startup. Or perhaps they spotted the potential, but the go-to experts they went to or the research they conducted threw a big list of risks, which perhaps in their assessment was not something that could be mitigated. But the fact remains that whether it's a bad egg that got into the system or a good egg that fell off the table, they would hate to have that kind of a scenario. We believe that an AI-powered deal manager, DILMA as we are planning to call it, will be able to take the load off the shoulders of analysts, of chief investment officers, by providing them with a rich data culled from across the ChatGPT environment, culled by the most powerful AI tools, to present to them within a short turnaround time a full list of possible red flags, a full list of perhaps risks, along with the mitigations, along with the best practices that they should look at. We believe that this could be such a powerful tool that could help compress evaluation time and the decision time. Because from the founder's perspective, a VC that takes too long to invest, an investor that takes too long to invest, is also a big no-no. How is it likely to help the founders? Well, imagine if the founder is embarking on the journey of growing his particular business, his or her particular startup, this kind of AI-powered deal manager will be able to present to the founders a full list of chinks that they need to plug even before they have their first investor conversation, even before they have their first customer conversation. Because, as they say, being prepared is half the battle won. Perhaps in this case, it could make the entire difference in winning the entire war. We are very confident that this particular tool, with your help, with your support and cooperation, could become a boon for the startup ecosystem. Are we concerned whether there would be more such tools that come into existence? Not at all. More the merrier. If anything that can help forward the cause of the startup ecosystem getting more efficient in terms of eliminating the scourge of capital erosion, in terms of scaling more peaks and more success stories, wouldn't that be awesome for the entire startup ecosystem? That's what we are banking on. Please do drop a line to hello, HELLO, at thegreatunicornhunt.com, or you could just WhatsApp to our official WhatsApp number 9076427678, and you could get a copy of the prospectus and share your thoughts, ideas in terms of how you would like to see this particular utility evolve. In fact, we are so excited with the possibilities that this could bring about. It reminds me of the famous Tom Hanks scene from the movie Castaway, where he creates fire and is so excited he wants to show the world. And perhaps that describes the kind of feeling we have, and perhaps the entire startup ecosystem is going to have once we are able to crack this particular aspect. But we now need to get back to the Craftspark episode. And I have some questions for Apola and Kumaresh. And my first question is for Apola. Apola, let me pick the thread from the previous episode and ask you a question. I'm really curious to know, What excites you the most as co-founder of Craftspark?
We are big time foodies, Sachin. We are very big time foodies. So it excites us the most that we are able to give consumers whatever they deserve, that is quality, quantity, and affordability, which we dreamt of in our times and we didn't get it. And that excites us the most. The journey excites us the most. Like if I talk about our journey, everything didn't come out with a proper framework. It was not like someone has given us the strategy and we worked out. We explored things. We dirt our hands. We got into the business. We saw so many problems, and then we, collected the data. We understood how to work on it, and we made it possible. That too with advanced cash pay model, bootstrapped, and with all the challenges existing in the market. Every challenge gave us an additional opportunity to understand there is a gap and we can click it. So that excites us the most, doing certain things which are impossible and we are yet executing it with all possibility and grace. This is the most important thing that excites us. For sure, we would not have got this excitement anywhere else. So we are following our passion, and that is what excites us the most.
Awesome. Interestingly, why don't you tell the viewers how the world would have looked had Craftspark not existed?
So I'll tell you three simple things how the world would have looked. And I think before starting any business, all of us should think this way. What if I was not there? What would be the gap in the market? The biggest gap in the market would be in future, people could not afford or demand any value proposition in the mass segment. This would have been overlooked with premiumization, and they could have still made a business of air, and they could not demand anything as such. You don't have anything to go in the market and ask for it. Second, 3,000 units, manufacturing units in India are 65% underutilized. And I'm just talking about packaged snacks. If we were not there, it would have been continued for a longer time. If you see news nowadays, people will say that, small players, regional players are taking over the big brands, right? You know why? Because they have to utilize their manufacturing units. They are giving 50%, 60% discount in the market and running the business. So we are giving them a better value proposition, which can bring them profitability and they can grow in the market. Third, Indian taste. Nowadays, if you see, with globalization, definitely, there is a lot of dominance on Firangi taste over India. If Craftspark would not have existed, they might have lost the Indian taste for the future generations, not only to India, but to the whole world. And that to regional curated taste. We are just not Indian taste. Every regional curated taste that we are offering in the market.
Sure. Awesome. Let me come to Kumaresh and ask him a couple of questions. Kumaresh, why don't you tell us about some brilliant ladder that your team manifested?
So talking about one of the snakes, about the transportation and radius bar and everything. So we realized very soon that we have to be an asset light model, so it doesn't restrict our expansion at any point of time in our journey. So we went very aggressively to find out third party manufacturing units pan India, and we are doing even today. So that actually helps us, not only get us the regional flavors and tastes of the products, but also helps us in expansion at any point of time to any radius of the country. So we don't restrict to that we have to fully efficiently use one single manufacturing unit. Second, from this particular part where we have actually received a very different success, what we say that is first time in the country for any FMCG brand, that is an interning brand model. Hearing that word, it will always create an inquisitiveness, or you can say, curiosity that what internship are you doing with an FMCG business? So obviously, when we reached out to these third-party manufacturing units, we always try to, as a team, try to find out where we can get further success in our business. What can leverage, put our profitability higher, scale up the business to a very different level. That is who we are as founders. So when we go to these third-party manufacturing units, we could just find out a lot of laminations have been, just dumped out somewhere in the warehouse, and I think that is something under their brand name. And we asked these TPM manufacturers that, sir, is this your brand? And they say, yes, but we could never do it. And that is where it tickled our brains that, boss, we can do this business, We can bring this, brands we could never go to the market, reach the business, because they are focusing still on the manufacturing and quality of the product. So we onboard these brands as an interning brand under our umbrella. Now, how does this help us? Okay, so obviously, first of all, when we take these products and we supply, we monetize it completely. So our marketing, research, and R&D cost is no more a cost; it is more again a profit for the company where we are earning business from it. First thing. Second thing is majorly when you understand what are those innovative and rarest of the rarest products that can create a very different business model in the country or a very business value in the SKUs. We try to get them understanding their heroism in the market. We try to get those hero products under our umbrella. So, for example, I would give you, like ABCD, 1, 2, 3, 4. When you hear for the first time, what is this? ABCD, 1, 2 alphabets, numbers. So, and then we realize as a team, yes, there is a mass segment where the parents want कि खाते खाते कुछ पढ़ाई भी कर लो. So we get the alphabets and numbers together. So this is how we are building each and every day, our business every second. This is one. And talking about obviously one of the snakes that I have just discussed with you, that the credit in the market. 15 days do business and 15 days you have to just do collections as an FMCG company. So we, since the beginning, we had a consistent thought process that whatever it takes for us to build the business more consistent and more rough, but we will never give any credit in the market because we are a bootstrapped company and every penny matters to put back in the business and try to scale up the profits. So out there, we had this thought, and that is how we don't follow the next 15 days to do collections. Instead, we try to do, more of liquidation of stock so that by the 31st of the month or the next first week of the month, we are not ending up collecting, but we are ending up collecting money, but ending up collecting orders from the business so that we can build the business in a very different and scalable way.
This is very interesting. This is a sheer win-win situation. And the concept of interning brands, because one has always heard of interns as employees, but the fact that you're actually making brands work as interns is superbly interesting. My next question was about the collections part that you mentioned, Kumaresh. Do you want to throw a little bit more light for the benefit of our viewers on how you have cracked the collections devil and the collections snake bite?
Yeah, so from the very first time, this industry has been very, you can say, a very complication is there, where every industry professional in FMCG industry would be talking about that 15 days has to be done business and 15 days has to be done collections. So all the salespeople, if you see 15 days, all the FMCG companies are busy taking orders continuously, and next 15 days they're running out taking, clearing the collections and trade receivables. And most of the regional players, if you see, they would be putting the stock, suppose today, and after once the bill to bill business. So that is how it is counted upon. We had a very consistent thought process, and from the initial days, we know that what mission and what philosophy in our business, even if it is financial metrics, what we build today will be taken forward till the end of decade or end of life of this business. Okay, and that is how the business can grow multifold. So we were very consistent on it. We can get today, suppose, a 2.5 crore or 3 crore business if we go on a credit mode. But we have made sure that no, we will be going only with an advance pay model. And that is how the next 15 days where other companies, are busy collecting, receivables from the market, our team is more busy, collecting and scaling up more orders from new vendors and new super stockists and new territories.
Very interesting. At this juncture, we are going to take inputs from our investors in our next section called the Investor State. It gives me great pleasure to welcome Amit Singal, who's running two funds, who's the founding partner for two funds. One is Fluid Ventures and the other is Real Time Angel Fund. Amit, welcome to the show.
Thank you, Sachin. Thank you very much for having me here.
Amit, what would you think of the landscape that Craftspark has stepped foot into?
Yes, Sachin, the space in which Craftspark has a lot of potential because I am following this category for long period, being a D2C guy. So I personally feel that this is the category where the people are looking for the healthy option and they are solving that problem. And overall landscapes look like where this category is increasing at around 10% per annum kind of thing. CAGR is increasing 10% per annum. So there is lots of scope, and we have seen multiple brands which are coming into this category. And I personally feel that lots of new player can be accommodated in this particular category.
Sure. Amit, is there any specific snake that comes to your mind that the founders should be particularly worried about or concentrate on or mitigate?
So Sachin, here the first snake which I would like to mention comes from my started accountancy background, which I feel that in this kind of businesses, lots of capitals are required because this is largely an impulse buying kind of thing where you will have to spend lots of money on the inventory and it needs to be available at all the offline stores. So that's the most important thing. So I feel that it's require lots of capital, and on the same side, it's require credit as well because in India the model is not yet evolved where people are buying cash on delivery or the paying advance to the manufacturer. So still there is a habit of distributors or the stockists to take inventory at credit. So I feel that that is the biggest risk to this business where once they will grow, they will require lots of capital. So I always believe that there should be a synergy where the people should be able to sell on advance, but that risk I can see in this particular business.
Awesome. Amit, this was terrific. Any other aspect that you would like to draw the attention of the founders to?
Another snake which comes to my mind, what I've seen in the food and beverages category or the FMCG category, where the customer is not very loyal about the brand. The customer is someone who keep doing experiment because this is related to the taste. So what he do every day, he start buying new things. So I have seen that in this particular category, the loyalty or the customer loyalty is a challenge.
Very true. At this juncture, I would like to take the opportunity to welcome Kishore. Kishore, welcome to the Snakes and Ladders Startup Show.
Thank you, Sachin, for the kind invite and for having me here. It's an honor to join this discussion. I'm excited to be part of the conversations that combine positivity with valuable insights. Congratulations to you and your team on this great initiative.
Kishore, what would your assessment be about the landscape that Craftspark has stepped foot into?
Sachin, I believe the market is big because more and more Indians are joining the middle class. Right now, the market is worth a whopping 50,000 crores, and it's still getting bigger. But even though it's exciting, it's also super competitive out there in this high volume, low margin business.
Absolutely. Kishore, would you like to draw the founders' attention to a couple of snakes lurking around the corner?
Yes, Sachin. After having gone through the presentation and hearing the founders, I'm interested actually in learning more about who their customers are, what problems they're trying to solve. I get that having more stuff in a pack is nice, but I also want to know what their moat is that makes their approach special and hard for others to copy. Neither having a clear differentiating proposition that solves a particular consumer need, nor any moat seems to be the risk for this brand that could make it a Me Too brand in this highly competitive business. That's one of the pitfalls that I see. The other one that I see is I hope the brand is working with at least 60% margins on their products. If it is less than that, especially when dealing with big retailers, especially in the modern trade and quick commerce space, it will become really tough for them to engage with thinner margins, and that could lead to bigger problems or risks if they have lower margins.
Absolutely. Any other snake you think that needs to be addressed at this juncture, Kishore?
Yes, Sachin. I can think of one other pitfall or risk that this startup faces. Based on whatever I heard from the founders, I heard them mentioning about they being present in 13-15,000 retail outlets, but I'm not sure whether they themselves whether they are spreading themselves too thin, and I'm not even sure whether they're present in across all channels, whether they have their presence in quick commerce, other e-com players, because it's a very critical piece to scale. Being present online across all e-com players will help them build awareness, bring customers into the consideration set, and also lead to conversions. I think it's important for them to spread themselves on right channels, because you never know what happens to when it goes wrong with one of the sales channel that doesn't perform. You always can counter the other one. I think that's something that they should look out for, and not spread themselves too thin within one channel.
Sure. Awesome. At this stage, I would like to pull the founders back in for some bites from them. Kumaresh, we spoke about riskiest assumption test, RAT. Is there a RAT that you would like to talk about?
So you can say that, one of the riskiest or highest riskiest assessment tests that we have done in the initial stages is, entire human race stops snacking and, drinking. So that is where that is the school of thought where we come from, obviously. But that's on a lighter note. Talking on a serious note, obviously, we feel that if you see centuries and decades continuously, the taste and platter changes for the consumers of human beings. Okay, so when we're talking, we're not just talking about the Indian consumers, but the global consumers. And time and again, that taste and platter continuously changes, and sometimes it randomly and rapidly changes. Might be till yesterday, you can say, tomato flavors or, some green chili flavors were very tasty and authentic for entire customer or, majority of the consumers. But now from today morning, you see, none of your flavors are working out, because we don't know, people have just tried to mix and match a lot of flavors, and they're liking some taste platter has changed. So obviously every brand, every company has those scarcity of those rats. And true to tell you, as an FMCG company, that is one of our biggest USPs, and that we work each and every day on the innovations of different kind of flavors. And that is where we say, if we talk about one of our potato chips flavors, we had cheesy cheese, which none of them, even the big giants or the startups, have ever put in the industry, a cheese flavor in potato chips. So that is where we come from. So we also try to protagonize and predict the future, that where are people going. Okay, where would people like to see the snacking industry? So we are also very innovative, and we try to fight these rats each and every day.
Apola, if I had to ask you what you perceived as a snake at the start of the journey, what would that be?
Yeah, so we came up with the concept कि हमें waterfall method पे जाना है. It means we have to launch in multiple states. But we didn't have the idea how to transport, how to solve the issue of transportation. Because when we started, it was contributing almost 15 to 20% of the overall cost, and it was contributing 15 to 20% of the overall cost, which was huge because we are in the mass segment. That time, it was the biggest snake for us, actually. Yeah, this is one of the biggest snake for us at that point of time.
Terrific. Coming back to Kishore. Kishore, would you like to draw the attention of the founders to a particular ladder that could manifest for them very soon?
Sachin, this particular startup seems to have got the basic hygiene right in terms of quality, taste, quantity, and even affordable pricing, which will help them reach the masses. Now, having said that, now that the hygiene is addressed, they should focus on brand building. It's time to invest more money into activities that promote the brand, rather than just focusing on direct sales or performance marketing. Brand marketing over performance marketing is something that they could focus on right now. Ideally, having a brand ambassador running all ATL activities like ads on television and radio and so on and so forth is something that they should look at to scale from here. One other option that they could look at is collaborating with influencers, having the content right across all retail media platforms, and also trying to create content for the open internet. This again will help reach the right people and boost the brand's image. And I believe that these are few things that the brand, this startup needs to focus on right now to scale from here. And that will help them move to the next orbit.
Terrific. You made an interesting point earlier as to how incentives drive behaviors, and well structured incentives could actually be ladders in themselves. Would you like to elaborate?
So, having said that, once you have the right people, what matters is getting the incentives right for people, right? If you have goals and you give right incentives to people, it will help you reach the goal, which should ideally be in the consumer's interest. Incentive structuring is a skill. You should take right people's help to get the incentive set right. Otherwise, it could completely go wrong and you will realize that you're chasing something else and you should not end up losing customers because you've got the incentive structure wrong.
Kishore, would you like to talk about another ladder that comes to your mind?
Sachin, one other ladder that I can think of is that this team, along with brand building, should focus on building the right team well in advance. You should have the right people with the right set of skills and competencies, and have them in place to chase the numbers rather than struggling to find right people at a later stage. That's something that this startup should look at to scale from here and move to the next level.
Kishore, is there a word of advice from your side for the larger founder community out there?
Yes, Sachin. There are actually a couple of pointers I have in mind for seasoned as well as upcoming founders out there. One is embrace pivoting. See pivoting as a sign of strength. Continuously listen to your customers and adjust your strategy accordingly. So embrace pivoting is very critical. Number two, brand building is something that you should invest from day one. Brand building, you need to get the balance right between brand building and performance marketing. Number three is balancing growth and profit. Aim for growth while keeping an eye on unit economics and profitability. One other pointer that I have for all of them is celebrating small wins. Acknowledge and celebrate your achievements, however small they are, no matter how small, as you progress towards your goals. And last but not the least, prioritizing self-care. Entrepreneurship can be tough on anyone, on your mental and physical health. Consider seeking guidance from a life coach to support you in this journey.
Coming back to Amit, any ladder that comes to your mind that the founders should be looking out for?
The ladders which I find in this picture particularly is the geo presence. As we see that they are presence in around more than 10 cities, district as of now, and they want to be present at all the 29 states. So once this geographical expansion will happen, they will get a scale of economy. So I strongly believe that is their biggest strength, because I have not seen any brand which have spread like this in very short span of time. So this looks very positive to me in this particular startup.
Any other ladder that comes to your mind, Amit?
Another ladder which they have, that is their strength as well, and I sometimes believe that is weakness as well. They have around 27 SKUs where they will have to work out on Pareto theory. What are the SKUs which are doing very well? So in case they will work on those particular SKUs which are doing well, and they can eliminate those SKUs which are not doing well, that will be very good ladder for them, because I'm not sure what is the breakup as of now in all SKUs, but definitely this is a continuous process where startup will have to keep evaluating that which products are doing very good, because I keep evaluating D2C, and sometimes we are very emotional attached to our various category, and we keep adding the categories or the SKUs in our brand, while the best startup is those where you can have a large customer base with less SKUs, because it will reduce your inventory requirement as well. It will reduce your working capital requirement as well, and you will be able to do very good forecasting about the sales as well. So the ladder which I strongly recommend is to keep watch on your SKUs.
Amit, any word of advice for the founders out there at large?
So Sachin, here my answer will be that understand your customer. So most of the time what we do, we create a product which we want to sell. Rather than that, if we will understand the customer, and again, this is a very continuous process. It's not like that you have created the product and now you start selling and you say, okay, now initial stage at the initial stage, people have accepted that, and you start doing sale only. So my strong suggestion is that keep evaluating the feedback, keep taking the feedback as well, keep understand what they want. In case there is any change required, do that immediately. So the more you will understand your customer, the more good product you will be able to deliver, and that will definitely strengthen your startup. And that is my only advice to everyone, that to keep working on your product, and this is very continuous process.
Apola, would you like to have the last word with an advice for all the founders out there?
Yeah, definitely. I will say one thing. Uh, Please don't give up. Sometimes when we start, it looks very, unstructured. Whatever we have planned, it might not work out in the beginning. We may feel that, it is not working out, luck is not on our side. But you have to understand that patience is the only key. And when you start looking at risk and challenges as an opportunity, always understand universe is giving you a signal to rectify and modify your mistakes that you have made and not understood and came into the business. It gives you a better way of understanding things. So rather than looking it in a negative aspect, look how we can solve the problem. Usually what happens, we as founders start blaming game, this didn't work out, this person didn't work out, that didn't work out. It is nothing, everything worked out. It's just that looking things at a different way, finding solutions, that how it can help you, and how it can give you a learning. Like, I'll give you a small example. When we started the business in the beginning, we came up with healthy snack segment in the market. So when we launched it, it didn't work out. People came up to us and said that liquidation nahi ho raha hai. How to do? We got panicked. But then we started doing extensive market research, and we found out that in mass segment, people are not bothered about the health, because when they see healthy, they feel that हम तो घर में दाल चावल खा रहे हैं, that is healthy ना. हम बाहर आ रहे हैं तो I need something which tastes or satiates my taste. We usually say that healthy snack segment is growing, but we don't say that unhealthy segment are degrowing. So we understood that we don't have to promote it, we have to take care of it. And when we launched with multiple other products like additional crackers, jhal muri, potato sticks, brought out internship product business, our business actually in the first month skyrocketed with 5x growth. So we didn't give up. It was very easy for us to give up. When we started, we understood a lot of things: how to solve transportation issues, how to come up with multiple TPM partner model of business. So you will, if you don't give up, you will find solutions, is what I will suggest.
That was awesome. This brings us to the end of the episode. I would like to thank the founders, Apola and Kumaresh, and I would also like to take the opportunity to thank Kishore and Amit for taking the time out for this show, for being so generous with their insight, with the wisdom that they have shared. Finally, it is about giving to the ecosystem by taking the time out for such exercises, which will help not just the founders featured on the show, but those outside watching this show with rich insights culled from the experience. Once again, thank you very much for watching this episode. Best of luck, best wishes.